Okay guys, welcome to today's video. I'll be doing another session based on liquidity to take and liquidity to target. Okay, so I think I got a question where someone was asking me about not really understanding exactly the imbalance to use, right? Because these strategies, or yeah, this part of SMC is kind of the most easiest for you guys to spot on the chart. So the person was actually kind of confused, right? So I'll just use this to explain that simple scenario, and maybe you guys will learn one or two. So this pair is gold, right? XAU USD. It's wonderful. The SMC setup works beautifully on this pair. So I'll be giving you different scenarios based on what has happened in the past and some of the trades I took. Okay, so that you guys understand it. When you see it, you know that, oh, this one I'm not supposed to trade it. This one I'm going to trade it, and basically using your 4 hours time frame, right? So the setup is simple. Basically, imbalance. If we see a particular form of imbalance on the 4 hours time frame, would trade into it, right? Would allow price to trade into it, then would continue, right? It means internal range liquidity towards external range, which will be our target. Okay, following the market structure. So all you just need to do is to just spot that 4 hours imbalance. That's all, right? You just want to spot it. If you go through if you back test through the gold pair, you discover, okay, look at this is my 4 hours time frame. Look at this impulsive move, imbalance. Look at 50% region tapped in, impulsive move, 50% region tapped in for a continuation, over and over and over again. As long as you're following the structure, imbalance, tapped in, market move up, both buy side, sell side, you get to see that over and over again, right? So same move here, right? So the current move the price made, someone's asking, right? So on this we can see here a certain form of imbalance here, a certain form of imbalance. Of course, this is an FVG is an imbalance, this a fair value gap, but I'll be explaining everything. A certain form of imbalance here, a certain form of imbalance here. Now let me start from here. Now if you look at this, it's actually a beautiful structure that market made. We had a low, market made all the way a swing high, right? All the way from this accumulation, we had market tapping into a low, and we saw an impulsive move to the upside, right? Now when market was trading, it left forms of imbalances, right? We have this one, we had this one, okay, this, this, and this, right? This one that it created, it quickly filled it up. Okay, now what happened? Someone was asking that, okay, he was expecting market to react from this imbalance right here, for market to react from here. Is it the person wrong? No, you're not wrong, but always consider swing structure, right? If I were to trade this, I would not be expecting market to do this. First thing I would do is to calculate the swing structure, right? What is the lowest low I want to see? Is this and this. So I would put my Fibonacci before I even consider marking out which imbalance do I want to use. Put my Fibonacci, right? My Fibonacci retracement tool shows me that this line here is the 50% discount region, which means any imbalance across the upside, I would not be interested to trade it if it's for buys, right? It means if I wanted to trade this continuation move, my eyes target would be on this imbalance right here, not this. Why? Because this one is kind of in the form of a premium region based on the swing, right? So you can see our market even did not do the 50%. This tells me that this, any point in time, if market is making a retracement move, this will be a very good liquidity target, right? I will be marking it. Why? Because when market made a swing high from this region, right, swing high, swing low, there was an incomplete pullback retracement, right? To me now, anytime market is coming, so if you can see this, I think we'll see it clearly from the daily time frame. Beautiful. Now if you look at this from the daily time frame, this is a low, this is the high. Market made a pullback to the downside that was kind of incomplete. Even if I do the 50% vision of this daily time frame, you see it is still at my 50% discount, right? The 50% vision on this um, imbalance on the daily time frame. You see that price did not trade into it. What does it tell me? Anytime price is coming back, I don't know when, this guy here would be a beautiful sell buy side order flow, and this will be structural liquidity for me to take out at any point in time. Maybe go decide to shift structure, right? Go decide to shift structure any point in time. If it's coming back down, this guy here will be structural, right? Because it was an incomplete pullback, and price might tap into this for a continuation to the upside. So that's just for observation, right? It means at this particular point in time, for me, based on the way I look at that, there would have been no trade on this particular region, right? But now look at what happened when price made a low from here and pump all the way to create a new high. There was forms of imbalance it created, which is this one. Now before before price is even making these moves to the downside, I would be looking for what, or when price is selling, I'll be looking at swing high, swing low. Just look at that, how price came. So of course my point of interest would be the midpoint of this imbalance right here, right? The midpoint of this imbalance. So you see how price mitigated the 50% region. It came down before the buy, and which corresponds to the 50% level of that imbalance, where I would have been basically taking a beautiful trade off, right? I'll be basically take a beautiful trade off, as long as my point of interest corresponds to a good discount region. Of course, this is the swing low, swing high. I'll take my trade beautifully. You can see how market mitigated this, and from this imbalance here to the external liquidity, which is the swing high, beautiful trade. You understand? So this is the difference of some people using this one. I would not use this market. This is not an incomplete pullback. This one would be where my eyes would have targeted, but all the way market did not come close to that region to mitigate it. It went and created a new swing high, right? Pulling back down. This would have been my point of interest. So as long as it corresponds, so this is how to pick your imbalance, right? Now someone was looking at this and say, oh, smart, I was expecting market to trade off this imbalance, but price took out the imbalance. No, this is a three candle move. You can see 1 2 3, there's a break of structure. So a low, a break of structure. What happened is market is coming to the order block, and remember this was region. Let me just explain. This was the imbalance price mitigated. You can see how beautiful it respected this imbalance. It did not come to take out the candle low, which would have been a good and safe region for you, where you put your stop loss, right? Now it did not even get there, right? But look at this one. It came and took out this candle low. That's because this guy is acting as an order block. Market is not was not trading from this. There was a shift in structure, a break of structure. A 3 4 hour candle move is different from this. Look at this movement, right? It's different from this reaction. 1 2 3 candles, then a break of structure. You can different from this. You can see how market did not, because this you called an imbalance, acting as a fair value gap. A market came and made a move off what the what order block, and some people were marking this guy here as an imbalance that they want to sell from. No, you must follow the structure. You can see how market, there was a break of structure, clean one like this. Let me mark this out. A break of structure that was coming from a good point of interest, a good point of interest. Now market mitigated a good liquidity. Of course, this is imbalance, is a liquidity region. Price inefficiency, market has tapped into grabbed liquidity here and broke structure. Beautiful break, right? A low, a sweep, a break of structure creates an order block. Now market is coming to tap into a bullish order block, and because while market was coming down, you saw a kind of a sweep, and you are marking this zone on the 4 hours as an imbalance. Market will take you out. Market will definitely take you out. It swept out this high in order for it to get a move, right? The move came to the order block and you saw a form of rejection. You saw a strong form of rejection, and you're marking this guy as, when this was, where's the previous swing high, swing low, this is the previous swing low, this is the previous swing high. So your trading range is between this swing low and this swing high. Every other thing inside are just internal structures, so you should be very careful, right? You're now coming here to mark sell side imbalance and you're expecting market to trade off that region. You're going to be taken out, right? Because market was bouncing off from what, a 4-hour order block, right? A 4-hour order block, and not just a 4-hour order block. If you look at the structure here, for example, say we wanted to catch, we did not enter this imbalance aggressively, right? Say we did not enter from this imbalance aggressively, we waited for price to mitigate it so we can go to smaller time frame in order to get a continuation. Of course, you can do that. So if you go to 15 minutes time frame, you're looking at, this was your imbalance, and of course this is the mid level. Let me draw the mid level very well. So your trade was kind of like a sniper, because this is the beautiful sniper, right? Market tapped into that mid level on the 15 minutes time frame and you saw a form of rejection. Remember, like I've explained to you guys, whatever form of point of interest you're using on higher time frame, if price mitigates that point of interest, if you want to take your trade, you're still going to use that same way. So if your high time frame point of interest is an imbalance, if you want to catch a continuation trade, you see market reacting on imbalances, right? So you see when market tapped into this level, it rejected, right? This was the previous low here. This was the previous low that market created, right? This was the previous, a sell, a low, a high, a low, right? So you can see how market took out this low aggressively, this high here aggressively with a body candle close. So all these regions market was feeling all the moves. So here we got a pull. So you can see how market came back to the imbalance that created on the 15 minutes time frame, which would have been a good area for continuation. You can see how market mitigated this, right? So if whoever took this trade here would of course had entered long at the mid level with a stop loss just quite below this region here, and you'll be targeting higher time frame point of interest, which is this high. That will give you a 1:4 trade, even if you had put your stop loss say below this region, which is the best in case of volatility. You still get 1:5. Traders who enter aggressively from here would see the opportunity also. The confidence of entering trades, continuation trade, is you just want to see that, oh, market is actually rejecting from that point of interest. So if you had entered aggressively, you targeted external liquidity, this would have given you a 1:7 here or 1:8 trade, right? The confirmation trade, it's here also. Now if you notice this, right, market also created another continuation trade. Of course, we're in the 50 minutes time frame. Our higher time frame point of interest is an imbalance. Any form of imbalance market creates will be good to catch trades, right? Now this is also another region traders would enter from, right? Traders using this particular setup, this is the mid level right here of this imbalance, right? This will be a third trade, okay? Stop loss just below, and you still be targeting the highs of external liquidity. This is also a 1:4 trade. So now just take a look at this. You have traders entering here, here, here. So good trades from here and here. Now this is the initial trade. Now watch what happened. Immediately market broke structure that we saw on the higher time frame here. This was the break of structure on 4 hours, right? What happened when market made that low? It came all the way. Look at how it came to sweep all this liquidity resting here, and while sweeping those liquidity, it was also mitigating what? Look at that. Let me draw that line very well. It was also mitigating the 4 hours order block, right? Immediately saw that move, boom, 4 hours order block. This would have been a good region for you to catch continuation trades to the upside, right? It came and swept all this previous low liquidity we have on this, which is on this time frame structural forms of liquidity, right? But as long as market has taken this out, you are done with this setup. And look at how it played out on the 4 hours time frame. Let's look at that. You can see market just came back, boom, right? So anybody entering this as an imbalance would have failed. What market mitigated was the 4 hours order block, and you can see how market rejected and is pulling upwards. So this is how you trade internal range to external range liquidity. Understand the structure. Make sure you're using your discount regions, your premium regions very, very well, right? Don't take, I've differentiated what an FVG and order block means, and fair value gap and imbalance, the difference between them, right? The similarities. Okay, I've explained that all fair value gaps are imbalances, but not all imbalance are fair value gaps. I've talked about that, right? So it helps you. So if you're treating this, you'll be wrong. If you're treating this, you'll be wrong. Okay, so beautiful setups here and beautiful trades. Study them, master it, journal your trades, and trade repeatedly. Trade it repeatedly. Anytime you see it, trade. Stick to one thing, and you will definitely make money. So that will be all for today, guys. See you guys on the next one.